Transitory is gone, never to be uttered by the Fed again. So, what does this mean? You came here for the truth. Today, I want to discuss three major topics, all surrounding the Federal Reserve and, of course, inflation. But the first, I want to look at the Fed's big shift, what has happened here. The second is the turning point, how this could eventually create something that the markets and, of course, the economy do not want. And number three is how this is permanent. I've got all of that and more. Let's begin. I'm sure you're already aware, but the markets did not like what Jerome Powell had to say. Dow dropped 650 points, and the primary concern is, in fact, Powell's taper comments. If you stay with me through this video, I'm going to tell you not only exactly what he said, how the market reacted, as well as those in the financial industry, what they are thinking, what's coming for you. So you can look at this. It is a sea of red, and you can see the major 4 US indexes all bleeding red at this time. It has been this way, of course, ever since approximately November 8th. They have been heading down. So we're almost a month into this where the markets have not looked very strong. Of course, the tech-heavy NASDAQ has appeared to be the best out of the 4 of them. However, the trend is clearly there, and you could see the technicals all showing essentially oversold signals at this time, but that doesn't mean the market's going to move in one way or another. It just seems to be interesting that when you have players like, let's say, Goldman Sachs and JP Morgan, they are the ones that are selling off at this particular time of, for instance, November 8th and all the way down. And many people are like a deer in headlights, not knowing what's happening, even though the details start to unfold over the coming days. The price action sometimes tells a story before it hits the news. We've got more on that in coming videos. Take a look here. Waves of volatility whipsaw markets on Powell tilt. Yes, that's right. Powell tilting to the downside. Signs of caution. Volatility is sitting near its highest since January. So this is the VVIX, essentially measuring the volatility of the VIX, which is a measure of volatility. But anyway, you could see right here just showing us that it hasn't been this way in quite some time. You look at the MOVE index. Volatility gauge for US bonds touches its highest level since March of 2020. The bond market is not, I repeat, not liking what's happening. And then you have this, the quotes. Okay, you came here for the quotes. It is appropriate, I think, for us to discuss at our next meeting, which is in a couple of weeks, whether it will be appropriate to wrap up our purchases a few months earlier. In those 2 weeks, we are going to get more data and learn about the unfolding situation. So he's pointing to one factor, but let's really clearly highlight what he is saying. Just like I have covered, if you've been watching this channel, and if not, hit that thumbs up button so that you get the next video that pops up from me, because I highlighted exactly what other members of the FOMC had to say. And it's quite simply that they want to taper their purchases, not the balance sheet, not going there yet, because they need to increase interest rates faster than what they thought they would need to. But in fact, if you go a little bit further back, the truth is that they always do this. They always try to ease the market in. They say something and see how the market reacts to it before, well before they're ever going to take action. Okay, so this right here is just giving us a little bit of what the Federal Reserve may do. We will see. Right now, they reduced the amount that they printed from 120 down to 105. The expectation is that this continues on through December and going down another 15 billion. But after that, what's going to happen? Okay, we don't know yet. Many people said there will not be a taper. There will be no taper. They were going to continue to print money and, in fact, print even more money. Now, look, the dollar is going to be inflated into nothingness, but that's along with every other currency. But the actions of the Federal Reserve, the head of the snake, and all of the other central banks are, by the way, all in conjunction with each other, all in coordination. They do this to create the boom and bust cycle so that you can be punished by this. And they always have the two-class system, two-tier system, which is today more relevant than ever, where you have the haves and the have-nots. And people who believe they are in the 1% are not part of the club. George Carlin, thank you for your wise words. Look at this. This is the Federal Reserve saying what we missed. It's about more than just messaging. The Fed misjudged the vigor and of the inflationary impulses hitting the economy as it simultaneously opened up more fully last year. What we missed, quote, what we missed about inflation is that we didn't predict the supply side problems. Of course, nobody necessarily did, but that's what is being blamed on. Okay, now this article right here, I believe this is the one out of Bloomberg that just shows so much. Okay, I'm going to try to race through it as quick as I can and give you only the good stuff, all right? Hawkish Powell, which I think, by the way, is funny because they're at 0% interest rates and printing $105 billion a month, but hawkish, anyway, is a force markets haven't faced in 3 years. All right, so if you want, by the way, you can look at the actual testimony that he had and so on. It's probably just make you fall asleep. I know because I've fallen asleep through many of their speeches and their statements and so on. Not only is he speaking in a more hawkish tone, but he's dropping major policy implications almost without regard to how the market may take them. All of the predictability he's previously tried to cultivate in terms of the taper and left off scheduling is in question. That actually is not true, but simply deviating from the we're just going to print as much money as we possibly can is suddenly hawkish and the market doesn't like it. Nah, you know what? This is the way it goes. Anyway, markets will be very reactive to the data, probably overreactive. There's a lot of fog that we need to get through. And so you can look back historically, the way that the Fed has telegraphed using their forward guidance in order to get this, the markets to move and the systems to move. They have to project forward because people need to understand what's going to happen. How are we going to do business next year? What are interest rates going to be like and so on, okay? So Powell is opening the door to an earlier rate hike signaling a sooner end to the taper. The risk to markets would be that the Fed started tightening well before the employment goals were achieved. This is not happening right now. Between now and the time the tapering is done, employment will continue accelerating. And that's what we have to see. We don't really know at this time, right? Stocks struggle in the first year of fast tightening cycles. So it depends. What's going to happen here? They want to start early because they want to go slow. Looking at it historically, if they go fast, it's because it's a real big problem. And then the markets are really, they react very negatively to that. Okay, you understand? So we'll see what happens in the next little while. I believe there was another quote that I wanted to show you here. The market was spooked, and within a few days, he walked it back. They're just talking about, how they did this going from 2018. The markets, he said one thing, and immediately, if you remember, if you're watching his channel, he really flipped on a dime, didn't he? This is just showing us, the data as it's been over the last little while. And then we have the latest inflation jump relative to others. Take a look. 6.2%. And going back, we haven't seen this level since 1990. If it gets a little bit hotter than this, we are going back to these crazy levels of the 70s and the early 80s. I don't know. We will see. We will definitely see. And I think that when you look at all of this, it's important to address how you will react, how you will make change. A lot of people, I mean, I've covered it hundreds of times before, and you could check my playlist, How To and Solutions, as well as the other ones. But you need to prepare in your own way, and that is addressing your portfolio, number one, but also get your stuff in order. Secure your home in every way possible. Have your garden in the backyard if you can. Take your food situation very seriously, your water harvesting, whatever it is, okay? Every step of the way needs to be handled. Okay, that's my message for you. If you appreciate that message, hit the thumbs up button. I do appreciate it. I really do. It helps me out very much. If you hit that like button, you are going to see the money rain down from the helicopters of Ben Bernanke. No, seriously, I do appreciate it when you hit that like button. When you do so, it helps notify a bunch of people out there in YouTube land that have never heard of the Money GPS. So you don't have to necessarily share it on your social media. You could just click that like button. It's right down below, and I thank you for that. All right. If you haven't seen this video yet, you definitely want to check it out. I got into some really good detail. So take a look, click it, and I'll see you there.